Hi, my name is Michael Baez. I'm the founder of Spark Bookkeeping, where we're drilling down your books so we can drill up your profits. For those of you who don't know me, I'm a licensed CPA and I've helped hundreds of individuals and businesses with bookkeeping and tax. I normally specialize in the construction industry and the trades, but I make these videos for everybody to help them out learning about tax and bookkeeping. Today I'm going to be talking about the One Big Beautiful Bill, otherwise known as OB3. I just want to let you know that we don't have complete guidance for some points, but we do have a lot of information for most of them. So I'll go over the most important parts that cover the most taxpayers, things that are a little more specific to high income earners or federal declared disaster zones we'll leave for another video. So the specific points I'll be going over in this video is the SALT deduction, the charitable contribution deduction, the QBI deduction, the educator expense, the no tax on tips, the no tax on overtime, the no tax on car loans, the new Trump account, and bonus depreciation, 1099s, and clean energy credits. All right, first is the SALT deduction, which has been increased from $10,000 to $40,000 for 2025 through 2029. And the SALT stands for state and local tax. So you're talking about property tax, car registration, things like that. The next change is with charitable contributions. Normally you would have to itemize them and you only benefit if the amount of itemized deductions is higher than your standard deduction. Now with the OB3, you can deduct up to $1,000 in charitable contributions regardless of if you use the standard deduction or you use the itemized deduction. So what this means is you really want to take note of any charitable contributions that you make throughout the year. If you were thinking about doing it, I would say go ahead and do it. You can benefit from it greatly as compared to in previous years. You might not have benefited if your standard deduction was higher than your itemized deduction. Okay, educator expense. This is also another deduction that doesn't matter if you standard deduct or itemized deduct. You can have this regardless. It's considered an adjustment, and it is $300 per person. So if you're married filing joint, you can get $600 to reduce your taxable income. And they have increased the list of qualified expenses. So no change to the amount, but the amount of things you can deduct has increased. Another change is the QBI deduction. This is for business owners of pass-through entities. There is now a new minimum QBI deduction, which is now $400, and that is as long as you have at least $1,000 in qualified business income. Next is the no tax on tips, and this is going to be relevant for 2025 through 2028. These cash tips are still subject to Social Security and Medicare tax, which equals 7.65%, but they are not subject to income tax. And this deduction is only for businesses that normally receive tips. For me, say I have an accounting firm, I can't start paying my employees and saying it's tips so they don't have to pay tax. It's only for ordinary like restaurants, maybe car washes, things that normally get tips. Okay, no tax on overtime, and this is going to be for the tax year 2025 through 2028. This deduction is going to be $12,500 for a single taxpayer and $25,000 for a married filing joint. There is a phase out range, so if you're single, the phase out begins at $150,000 adjusted gross income. So just think about if you make $150,000, they start reducing the amount you could deduct, and then once you hit $275,000 in the year, you can't take any of the deduction. It's completely phased out. And then for married filing joint, you just double that number, so that would be $300,000 when the phase out begins and $550,000 when the phase out ends. Also, if your filing status is married filing separate, you cannot claim the no tax on overtime deduction. All right, no tax on car loan interest. So do note that this is one of the only deductions that you can take when you only have an ITIN. If you don't have SSN, Social Security number, you can't take advantage of the overtime, the tips, but you can take advantage of this no interest on car loans. All right, so for tax year 2025 through 2028, you can deduct up to $10,000 in interest on car loans for cars that were manufactured in America. So this deduction is phased out depending on your adjusted gross income. For single taxpayers, it begins to phase out at $100,000, and then once you hit $150,000, you're completely phased out. If you're married filing joint, it's going to be $200,000, and then once you hit $250,000, you're completely phased out. Another thing to note is this is for car loans that were incurred or refinanced after 2024. The next thing I'm going to talk about is tax deferred accounts, which are similar to retirement accounts, and they're being referred to as the Trump accounts. And these are for your children under the age of 18. The income grows tax deferred. The main difference between this and setting up, say, a Roth IRA for your kid is the Roth IRA and traditional IRAs require that the taxpayer or the child in this case has earned income, where the Trump account, they do not have to have earned income. Also, for any child that is born between 2025 and 2028, you are able to make a $1,000 deposit to start this account. Think of it as a seed fund, and they will reduce the tax you owe by $1,000. So it's a dollar for dollar reduction. It's basically taking the money that you would pay for the taxes and putting it into the Trump account. And I would definitely take advantage of this if you do have a kid from this year till 2028. And then after that, starting July 4th, 2026, you can make after tax. That means you get your paycheck, you get the taxes taken out, you can make a contribution of up to $5,000 per year. And these contributions are separate from any retirement contributions you make for your child. So say if you do Roth IRA, traditional IRA, anything like that, they don't cancel out. You can make them independently. Keep in mind that you can't distribute the money from this account until the child turns 18. Also, in 2026, employers can offer this as a fringe benefit to their employees, offer contributions to these Trump accounts, and they can deduct up to $2,500. And as of today, we are still waiting on guidance on how to exactly set these accounts up and be compliant. But as soon as I hear something, I'll let you guys know. Also, at the end of 2025 and halfway through 2026, a lot of clean energy credits are going to be expiring. So that's residential clean energy, for your clean energy incentive for your house. Also clean car credits as well. A big change also for businesses is the bonus depreciation is going back to 100%. Every year it was decreasing about 20%. I believe it was at about 40% going into the next year. Now we're back at 100, and it should be considered permanent, which means they just don't have a date of expiration yet. Also, the last part that should affect almost every taxpayer is 1099s, NECs, miscellaneous, Ks are all going up as far as the minimum required amount that you have to report. So previously, if you ran a business and you paid somebody for services that didn't have a business, they were like an individual or an independent contractor, you would have to give them a 1099 NEC if you paid them anything over $600 in the tax year. Now that is getting raised to $2,000. So anything under $2,000, you will not have to give them a 1099 NEC, and that is for this 2025 tax year. This also affects people that don't have businesses because you will be on the receiving end. Also, if you send money through Venmo, PayPal, things like that, sometimes, when you do sign up, they ask you for your Social Security or an EIN if you're setting up as a business. This is so they can give you a 1099 at the end of the year. They just have raised that threshold over the 600. All right, so that was OB3, the one big beautiful bill. I briefly went over everything. I didn't want to get too into the weeds, just kind of make a general video for everybody. If there's something you want to hear more about, feel free to let me know, and I'd love to make a video breaking it down. I don't want to get too complex just because there is a lot of tax language that most people won't understand, but I'll do my best to break it down in an easy to understand way. And even though I did break this down to make it a little more simple for you, I do not recommend you do this yourself. There are a lot of little things you have to get right, and they get very complicated. So I do recommend going to a tax professional to apply any of these deductions and help you out with your tax return.